Good morning and welcome everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, today we have our focus on the power sector. The power sector has been in the limelight over the past, I think, 8 to 9 months, Santo. If you look at some of the power sector names, they have been among the outperformers in the market. The view is that the sector's profitability is likely to turn around in the coming years. That is what a lot of people, investors out there have been talking about after what has been more or less a lost decade, right, for the power sector. They've been saddled with transmission issues, debt issues, a lot of outstanding payment issues from state discoms. So a lot of issues have plagued the sector, but clearly it looks like things are looking up. And one company within that sector that is trying to turn around its fortunes is Reliance Power. Now, Santo, you would remember Reliance Power, of course, in back in the day, it was the biggest IPO before the Paytms and LICs of the world.
Exactly, CJ.
And what was the reaction at that point of time? Everybody thought that Reliance Power was it, right?
Well, at that point in time, I still remember this was 2008, late 2007, 2008, and the way the Reliance Power IPO was being pitched, it was like a sure shot money doubling scheme on listing. That's the way almost everyone. I've seen quite a few IPOs during the last 26 years, but the kind of hype that preceded this IPO was something at a different level altogether. Right. And even if you would go to a provision store, the person there would try to probably convince you into opening a demat account. Right. So such was the hype. And of course, we all know what happened. An anticlimax, the stock listed below its issue price. Right. And from then onwards, it's been one uninterrupted ride downhill.
That is true, Santo. I mean, if you look at, why there is, efforts to turn around Reliance Power recently is that recently the company has been getting into raising a lot of capital for itself. It has sold about 15% stake to, raise about 933 odd crores from Varde Partners. It has also gotten into an agreement to raise about 1200 odd crores in terms of in a debt deal as well. So that debt plus equity, financing scheme that they have at this point of time, they have raised more than 2000 crores. But for me, I think what I find curious, Santo, is the timing of this fundraising, because this is coming just at the juncture when there is a lot of optimism for the power sector going ahead. A lot of people have been talking to, and I've been also talking to, they are of the view that after almost 7-8 years of power surplus in the country, when there was a point of time when India was almost exporting power to nearby neighboring nations, now it seems again we are entering into a period where peak power deficit is going to become the norm. That means basically the demand for power at the peak would be less than, or would be more than the supply. And that is largely down to, of course, this is something that, you've seen already in the West, that the lack of investment into the older regime of fossil fuel based power plants and those sort of, capacity has now meant that when power has come back, demand has come back so strongly after the pandemic, suppliers are, facing a lot of challenge to supply that. So in this sort of a situation, generally, when this sort of a period came between, say, 2003 and 2011-12, power sector was one of the most dominant sectors. Also because of the capex cycle, you had huge, demand from power, for power from manufacturing space. Clearly, profitability was very strong, and that is what a lot of people feel, that that is going to be the outlook for the power sector, and Reliance Power is trying to get into that.
Well, the stock has generated a lot of interest in recent times. In fact, if you ask me, it's one of the most tipped stock in the market right now, and everyone is looking at it from the from probably a 3-year perspective, where the stock fell to as low as a couple of rupees, and today now it's gone up to 20 rupees, so it's been a 10-bagger. But if you had been holding the stock for 5 years, somebody who's holding the stock for 5 years will have a very different story to tell. The chart looks much different because the stock price is still less than half of what it was 5 years back. Now, that said, still I would say that it's a little early to get into this stock. There is a lot of chatter at this point in time, but let's also not forget the fact that the company has still to demonstrate any meaningful growth in its top line or bottom line for that matter, and even debt levels, while it might manage to reduce some of it, it's still fairly high at 23,000 odd crore, which is not really surprising for a capital intensive business like power. That's but natural. But here the only difference is that you still have to see some kind of improvement in its top line to be able to take a confident bet on the stock. And right now, I think a lot of buying is taking place, and the stock is bought by people who know of how the story here is going to unfold, right? There is obviously a lot of retail frenzy, but I suspect, and at least this has been the trend often, where you try to get into stock where the informed set of people with definite information are buying. It's very hard to really make money on that one.
That is true, Santo, but I think, of course, there are two types of investors who will be looking at Reliance Power at this point of time. There will be the long haul investors who would be betting probably, that over the next 2 to 3 years, 5 years, there is a revival in this company. Already, another, group company, Reliance Infra, has been showing signs that it is on the recovery path. So a lot of long-term investors will probably be betting on the longer-term horizon. But I think from short-term perspective also, if you look at the technical setup of the stock, it's looking quite bullish on most of the momentum indicators at this point of time. Yes, the relative strength index is now above 70 mark, but it's not deep into the 70 territory, right? It's just crossed that level. So clearly, even though it is an overbought zone, there is still a lot of room for upside going ahead. And I just feel that short-term traders or short-term investors with a point of view about 6 to 12 months may look at any sort of a correction in the stock as a bargain buying opportunity going ahead, Santo.
Well, with that, let's take a look at how the market is set up for today, CJ.
Well, Santo, it looks like a very strong end to the week. If you look at the exchange Nifty, it's indicating almost a 100-point up move on the Nifty when we open at 9:15. The handover from Wall Street has been very, very good. All the three benchmark indices in the US ended higher, despite US Fed Chief Jerome Powell indicating, probably reiterating basically what he has been talking about for a long time now, that the fight for inflation remains, and now that 75 basis point rate hike seems to be penciled in next week. Apart from that, mercifully for us, of course, crude oil prices continue their slide. Higher US supply or higher draw from the strategic reserves of the US, probably at record high of almost 18 million barrels, has meant that there is concern now that supply is now coming back at a time when demand is slowing down, especially because of China. So crude oil prices is crude oil market at this point of time is very interesting juncture. There is talk, of course, that the OPEC may cut supply by another 1 million barrels per day. So very interesting to see how that develops for our economy, Santo.
Well, and back home again, the kind of strength that the market has shown despite the weakness in global market, that's really given a lot of confidence to bulls. That's how I would put it. And the
you can see that in the small cap and mid caps
very clearly. And right now the focus is clearly on the 18,000 mark.
Yeah.
CJ, if the market were to hold above that and close above that convincingly, then a lot of fence sitters, I'm sure, would jump in. Well, that said, let's quickly dive into the stocks on our watch list this morning, starting with Repco Home Finance. Now, Repco Home Finance first quarter numbers were a mixed bag. It disappointed on some fronts, but there was also some bright spots as well. But the market seems to have taken a shine to the stock after the first quarter earnings. Now, what's worked well for the company is that there's been an increase in loan disbursal. Of course, there's been a hit on the yields, and there's been for a reason, because for the last many quarters, the loan book was consistently declining as that consumers were taking their loans elsewhere. So,
yes.
Repco Home Finance did quite a few things. One is that it lowered the interest cost, and besides that, it's waived processing fees in many cases also. All this led to some bit of pressure on the company's first quarter earnings, but the market is also looking at some of the positives, which is mainly that there's been an improvement in asset quality. Gross non-performing asset ratio has now reduced to about 6.4%. that would used to be around 7% for many quarters, and the recovery, loan recovery has been pretty good, close to about 140 crore worth of recovery, and that is what has helped the improvement in asset quality. So, close to about a 30% rally in the stock price since the numbers were reported. ICICI Securities has a bullish view on the stock, and according to ICICI Securities, valuations are pretty reasonable. It's trailing at less than book value, and it can easily go up to 1.1 times book value. It has a price target of close to about 470 rupees on the stock.
No, Santo, I think this is more a hope trade than really something that is driven by fundamentals, in that sense that yes, at this point of time, asset quality is improving, recoveries are improving, and of course, if recovery is higher, that means that a lot of the provisions that were made earlier can be written back, and that automatically boosts your net profit and your earnings per share in the coming quarters. I think that is what the market is getting at, but I think that upside from that will most likely be limited. We have already seen a 30% a rally in the stock. After that, you all want evidence of growth. You want to see, because all of your peers at this point of time are showing very, very good traction as far as loan growth is concerned. On the other hand, Repco Home Finance's AUM actually declined on 1% on a year-on-year basis. While if you look at the net interest income, it declined almost 6% on sequential basis alone, leave alone the year-on-year basis. So clearly, there are a lot of challenges for the management, the new management that has come in. They have brought in a new strategy, but at this point of time, I feel that the headwinds are a bit too much. Also, let's not forget that in a rising interest rate environment, cost of funding for Repco Home Finance will be higher. So therefore, the comfort on margins will also be very, very limited as far as a housing finance company like Repco is concerned. If you look at what Sher Khan had to say after the company's earnings came out, for the Q1 earnings came out, they have advised their investors or their clients to actually take profits on every rally in the stock, because they believe that at this point of time, there are better bets within the housing finance sector than Repco Home Finance. Well, Santo, the next stock on my radar today is your old favorite actually, CDSL. I was looking at the technical charts of the stock, and recently, past 1.5 to 2 months, there had been a little bit of consolidation, because of course there were concerns that retail investors were dragging their feet from the market. People were not so sure that after the bear market that we have seen over the past 8 to 9 months, whether retail investors will come back anymore. But recently, if you look at data, we hit the 10 million mark recently. That goes to show that appetite still remains quite strong. And on the technical chart as well, the bullish momentum at this point of time in the stock is very, very strong. GEP Capital has come out with a recommendation. They expect almost a 22% upside in the stock in just the next 1 month. And from a fundamental point of view, something very interesting happened in the insurance space, Santo, wherein the regulator is now mulling to dematerialize insurance policies. Now, of course, insurance policies are available digitally, but they are not part of your demat account. Going forward, hopefully if this goes ahead, then you could hold your insurance policy along with your stocks in your demat account, and that can open up a new user base, because of course there are more insurance policy holders in this country most likely than there are demat account holders. So a lot of people feel that this could bring in additional business as far as CDSL is concerned.
Numerically, yes, but I'm not sure how that will work, because unlike stocks, you don't buy insurance policies very frequently. Right?
That is true.
Once a person buys an insurance policy, that's about it. Now, the stock has seen a major re-rating since in the last couple of years, and there's been a visible improvement in the company's earnings, but that now seems to be tapering off a little bit. And given that the market again has been in a narrow range over the last 1 year, of course, it's now inching again. There is talks that it may move on to a new high, but that enthusiasm among retail investors which you saw last year, that clearly seems to be missing, and you can already see that in the number of new demat account additions happening month on month. I think it peaked sometime in January, and since then it's been slightly downhill. So unless CDSL is able to show sustainable growth from its other streams of revenue, I think probably you're likely to see the upside capped for the time being.
I think, Santo, this insurance policy thing could be that additional level of growth for the company. Also, as far as demat is concerned, if you look at Angel One's performance in the month of August, they clearly have seen a sharp jump sequentially as far as gross client addition is concerned. So I think there is, of course, some bit of interest and participation coming back again in the market because of the rally that we have seen from mid-June. I think that would have attracted a lot of retail investors, and it will be interesting to see how this develops going ahead.
Well, last stock on my watch list is Samvardhana Motherson International. The stock has come up very sharply since its first quarter earnings, and pressure on margins is the big reason. IFL has trimmed its EPS estimate. It's maintained a buy rating, but trimmed its EPS estimate on the stock by almost 30% for this year and 13% for the next year. The big reason for the pressure on margin is that many of the contracts that Samvardhana is locked into does not have a pass on cost clause for
so
higher cost.
Will be
yes, so that is where the pressure is coming, and the company has said that it is in talks with its clients, but at this point in time, clearly the market doesn't appear to be too convinced about the stock.
Well, Santo, before I go back to Samvardhana, let's quickly take a check on the market, and it looks like a very strong opening, more than 100 point gap up opening for the Nifty 50.
I think you're going to go into the weekend on a very happy note.
Yeah,
CJ.
Definitely. I am already happy, Santo. If this stays and in this territory, I think we'll all have a good weekend.
Just look at the market breadth, CJ. Close to 1800 stocks up and just 200 stocks down at this point in
time. Yes, and the Sensex has moved above the 60,000 mark as well. well.
Yeah,
Santo.
strong buying again in bank stocks. ICICI Bank, SBI among the big gainers in early trade. ICICI has topped 900 rupees. A good comeback there by ICICI Bank.
Yeah, clearly. And if you look at the Nifty Bank also, Nifty Bank is, of course, we talked about small cap and mid cap outperformance, but I think there has not been enough limelight on the Nifty Bank's outperformance to the Nifty. Clearly, at this point of time, banking names are again back, have got their mojo back, especially in light of that Morgan Stanley report that came out earlier this week, where they have basically just gone all out and said that just go and buy as many banks as possible, because the second leg of re-rating for this sector is on the anvil, on the hope that the capex recovery is already underway, and they're expecting a big boost in capex in FY24 and FY25. So a lot of long-term investors, probably a lot of institutional investors as well, would probably be accumulating a lot of banking names at this point of time, Santo.
Well,
Santo, coming back to before I talk about my last talk, one point I wanted to make about Samvardhana is that I totally agree that the outlook at this point of time is not looking very pretty. Also, they have a huge amount of international exposure as well, and Europe is one of those major markets where they have a decent amount of exposure. And given what is happening to Europe at this point of time, things are clearly not looking good for Samvardhana. But on the other side, if you look at the group business, the wiring business is actually something that has actually caught investors' attention, largely because the wiring business is very domestic oriented. Almost more than 75% of the revenues come from the domestic market. And there, as you have already been iterating, past few months, the auto sales recovery story has been gathering pace. I still remain a bit skeptical about that. But clearly, at this point of time, investors are junking one group company for the other in that sense. Last talk on my radar today is from the new age technology space, Zomato. Two brokerages, it's very rare, but two brokerages actually came out with very bullish call on the company. These are Credit Suisse and Morgan Stanley. Now both of them are expecting the earnings momentum in Zomato to really accelerate going ahead. Both Credit Suisse and Morgan Stanley have suggested that Zomato could end up surprising, Street's estimate for its EBITDA or operating profit in FY24 and FY25. So that is something that clearly to watch out for. And apart from that, they believe that the recent leg up that we have seen in the stock, Santos, since that 40 record low was touched, and the stock has moved towards almost 63 levels. I think a lot of investors now are comfortable with the fact that Zomato has given a guidance that they hope to achieve adjusted EBITDA, positive EBITDA by Q4 of FY23 or by between Q4 of FY23 and about Q2 of FY24. So clearly, I think that guidance and that profitability, visibility as far as Zomato is concerned is really working wonders for the stock. And overall, even though we have seen almost a 40% rally, Santo, in Zomato, the stock still remains quite attractive. It is still quoting below its IPO price. So the valuation are nowhere rich enough, as a lot of people have been talking about. The risk reward remains quite attractive. I would expect that the upside will continue going ahead.
Well, possible, CJ. Just one thing here. We've seen research report, strong bullish reports in the past also. I think just a couple of months back we had seen a lot of brokerages coming out with
the night
reports.
Dark is before the dawn.
Right, and the price target was something similar, 80. And then suddenly you have this news about big investors wanting to sell out and the stock crashing all the way. Right now, I think, CJ, what is happening is it's technical factors in play. The company's fundamentals have seen, and definitely they're better than what they were.
I think June quarter earnings were pretty
good. Yes, there's been a definite improvement, but I think right now it's a lot of technical factors at play. A lot of HNIs have got into the stock around 40 odd levels when the stock had come crashing, and they would now be looking to cash out a little bit, which is also explains why the stock has not gone anywhere in the recent market up move. It's been quite an underperformer. The ones who have made some quick gains, they would now be looking to cash out if they have not already. And now you need a fresh set of buyers to take the stock.
And I think, Santo, that those fresh set of buyers could be the institutional investors.
Yeah, maybe they'll read this report and then...
and absolutely. And that is what happens. That is actually what happens. I mean, we have already seen that a lot of domestic mutual funds were accumulating the stock back in July, when the stock was going through that run from about 70 odd levels to almost 52 odd levels. And after that, of course, in the first week of August, we saw a very massive crash in the stock to about 40 odd levels. So I will not be surprised that when the data comes out for the month of August, you would see some bit of net buying from domestic mutual funds, because those are the guys who have actually been accumulating the stock back in July. So yeah, interesting. Looks like Zomato probably will still remain in the limelight over the next few quarters.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Well, do share your comments in the feedback section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, have a spectacular trading day.